Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today I want to talk about cryptocurrency and the 1031 exchange. We have been talking about how the IRS has launched Operation Hidden Treasure in efforts to target non-filers in cryptocurrency, people who have not claimed their cryptocurrency transactions and all that, in an effort to close the tax gap. Because the IRS seems to think that there's like $1 trillion tax gap between what's owed in cryptocurrency taxes versus what has been paid. So they're looking at that. But I want to focus today on 1031 exchanges, and I've really been kind of hesitant to even cover this subject simply because it is such a hot button topic, very controversial. But I want to share with you, back in June, the IRS issued a legal opinion that said that 1031 exchanges in cryptocurrency prior to the Tax Cuts and Jobs Act did not apply. Okay, so with the Tax Cuts and Jobs Act, that slammed the door on any possibility of crypto to crypto exchanges being 1031 tax deferred. Now, prior to that, it was very controversial. You had a half of folks saying, yeah, it should apply, and a half of folks that saying that it didn't. I was on the side of it didn't. I have video proof that says I did not agree. But the reason is that the nature of cryptocurrency makes 1031 really kind of hard to sell. So let's talk about the 1031 law. The 1031 law, it allowed taxpayers to defer gains on like-kind properties. This law was written to really apply to real estate. Okay, now understand that the 1031 law is 100 years old. It was written in 1921. So that law is 100 years old. You know, it wasn't around 100 years ago, cryptocurrency. But also during that time, there has been clarification that other types of things, other types of property are not eligible for 1031 exchange, like stocks and bonds and notes and precious metals, that kind of thing. So with cryptocurrency, the way that it operates kind of like stock, right? Because stock, you pay capital gains on stock just like you pay capital gains on cryptocurrency. And so with that reasoning, that is why I believed that the 1031 exchange did not apply. Now, what it says in the legal memo is that, and also the legal memo, again, is considered an opinion. And the reason it's considered an opinion is because nobody has gone to tax court yet to challenge this. But I think that is going to happen sometime soon, right? Because the legal memo addressed specific exchanges like Bitcoin, Litecoin, Bitcoin to Ether. And the only opinion I have as to why that is because whoever wrote into the IRS specified those things. But I wasn't there when the IRS wrote the legal memo, so I am not an authority on that. That's just my opinion. But the reason that they gave that the like-kind exchange, the 1031 exchange, did not apply, it says that they have different functions. So in order to acquire Litecoin, a trader must generally give Bitcoin or Ether in exchange. In order to sell Litecoin, a trader must generally receive Bitcoin or Ether in exchange. And so Bitcoin and Ether acted as an on-ramp, off-ramp for investments and transactions in other cryptocurrencies. So because of this, the IRS has said that each differed in nature and character. Okay? So So the memo specifically said exchanges of Litecoin for Bitcoin or Ether are not eligible for Section 1031 deferred exchange treatment. Now, Again, it specifically addressed those, and who knows why that is. But again, I think it's because somebody wrote in. Now, thinking about the 1031 exchange, if you reported the 1031 exchange on your tax return, you have at least reported your cryptocurrency transaction. So the IRS can't say you didn't report it. But there are some people who believe that, because they believed that the 1031 exchange did apply, that they did not report their cryptocurrency transactions at all. So you're going to have two different issues here, I believe. Because the IRS is looking for this money, I believe people who reported the 1031 exchange are going to be an easy target, simply because you've already put the information there. Were you wrong for that? Absolutely not. Because at the end of the day, there was nothing in the law that specifically said 1031 exchange did not apply to cryptocurrency. There was nothing that said it did either. Those words were not there because, again, the 1031 law is 100 years old. Okay? But the reason, again, I think it's going to be an easy target is because the information is there. And so I think at some point that someone is going to challenge that, because we're talking about a whole lot of money that has been made in cryptocurrency, and people did like-kind exchange and deferred those taxes. So the IRS is going to go back, and when they're auditing these returns, and go, ooh, look at that 1031 exchange. Let's go get that person. And it's gonna cost people some money, right? Because there's gonna be tax dollars that have not been paid on that cryptocurrency. Now, for people that participated or believed in the 1031 exchange for cryptocurrency and you did not report, well, then that becomes a problem of not reporting, and there's going to be extra fines and penalties there that the people who did report a 1031 exchange won't have. Because it's not that they didn't report, they just reported the income and said, hey, we believe this applies to the 1031 exchange. And so now only time is going to tell how the IRS is going to approach this to see, exactly what's going to happen. I'm going to be watching this simply because at some point, depending on the dollar amount that's involved, there's going to be somebody that's going to take this to tax court and fight it, because, there are people that have made millions and millions of dollars in cryptocurrency and have not paid taxes based on this belief in the 1031 exchange. But like I said, now the IRS has issued the opinion that said that prior to 2018, the 1031 exchange did not apply. How they're going to approach that, if they're just gonna, let that go, I just don't see that happening. I will be surprised if they just let those 1031 exchanges go. But again, I don't see that happening. So if I were you in that position, I would be getting all of my documentation and such together. So to be ready when the IRS comes, because you're going to have to defend yourself in that to see, if that's going to stick, or if you're going to have to pay those tax dollars. And then depending on the amount of tax that you may have to pay, then you may have to go to the resolution phase and work out a payment plan or something with the government in order for you to be able to, basically to get a right standing with the IRS. So yeah, so for my 1031ers, I would honestly tell you to get ready. Okay. And depending on what that amount is, really, you got to look at the cost benefit, right? If what's going to cost you to retain an attorney and all of that is going to be more than what you have to pay in cryptocurrency tax, you might just pay the tax just because it's cheaper. But I do believe there's going to be someone with enough skin in the game that is going to take this to tax court, and then we have to see what happens. There are challenges right now in a lot of in the crypto space, and dealing with, the cryptocurrency platforms. There's a legal fight going on right now between the SEC and XRP. So yeah, so there's a lot that's happening in the crypto world, and we just have to wait and see where it takes us. All right. So I hope that helps you out. Thank you guys so much for tuning into Home Biz Tax Talk, and we will see you next time. Bye.